Hello and welcome to Crypto Weeklies. In this video, we analyze Ethereum, ETH, conduct machine learning based price forecast, regression analysis, accumulation strategy, and some of the estimated bull target related to Ether. None of the content is financial advice. Ethereum has been number 2 crypto by market cap for quite a while, but what is stark right now is the difference between the market cap of Bitcoin, which is ranked number 1, and Ether, which is ranked number 2, is more than 1 trillion. So Bitcoin's market cap is at around 1.38 trillion, whereas Ether is at around 300 billion, so which leaves a gap of almost more than 1 trillion between the two market caps. And you can see evidence that using comparing the price action. Now Ether's price action is at around $2,521 back during the yearly open. If we go over here, this is price color coded based on risk levels. Back during the yearly open over here at around when December ended and January began, it was at around 2200, a little over 2200. Now in the course of 1 year, price is back to the essentially close to the yearly open at around 2500, only again slightly more than 15%. But if you compare that with the higher market cap crypto, that is Bitcoin, only Bitcoin is higher market cap than ETH, and check at around Bitcoin's price action during the yearly open. Let's check over here at around January 1st or 3rd, the price was at around $42,800. Now the price is close to 70,000. So in terms of percentages, at around 30,000, almost 30,000 gain over 42,000. That means somewhere between 65 to 70% gain in this year, whereas Ether barely managed to make a 15% gain. If we go and check the ETHBTC pair, you'd find that since September 2022, that is when Ether shifted its proof of consensus mechanism from proof of work to proof of stake. Back in that time period, one Ether used to fetch almost 0.08 BTC. Now less than half of that, around 0.0365 BTC. And if you would like to look at it from a whole numbers perspective, that at the same time period, that is September 2022, one Bitcoin used to fetch almost 12 Ether tokens. Now one Bitcoin fetches almost 27.37 Ether tokens. That means the number of Ether available for one BTC grew by about 2.25x over the course of 2 years, 2 years and some change. So if we were to look at the trend of this Ether BTC pair till about December, I think the trend usually does shift around the post halving year. That is, again, you can look at it, the previous post halving year for BTC was in 2021. During end of December, the pair was at around 0.028, and in 2021, towards the end of 2021, it went from that to around 0.084, almost grew by about 4x. So again, if the pair manages to bottom at around 0.035 this time around, and let's check at around instead of a 4x, because again there has been a trend of lower highs across different market cycles. So back in 2018, one ETH could fetch almost 1/10 of BTC. So for example, if BTC were to go to 100k, 1/10 of that would be at around 10k ETH. So if that were the case, again you know that that's not the case, because right now BTC is at around 70k, but ETH is nowhere close to this 7,000, which would be 1/10 of that price action. And ETH to catch up with BTC at that kind of level at this phase of the market cycle does not seem likely. So again, if we were to extrapolate the lower high structure for example, for the 2017-2018 market cycle, the high was at around 0.10, that is 1/10 of Bitcoin's market cap. In the 2021 high was at around 0.08, and again if we extrapolate that to somewhere between 0.06 for this market cycle, that would be around somewhere around 2x from the potential low for Ether on its BTC pair, and at 0.06, if we were to go back and check in terms of whole numbers, let's check when the price of Ether was 1 Ether used to fetch almost 0.06 BTC. What that was in the week of January 21st, 2024. Let's check on January 21st of 2024, what was the pair doing in terms of the Ether BTC standing. Again, Jan 21st, 2024. Going back on here, checking some on a zoomed in level. On January 1st, 2024, again almost 1 BTC to fetch almost 16 ETH at that point in time. And if let's forecast it from BTC's perspective, let's consider the 2 standard deviation ceiling on our machine learning price analysis for BTC, and look at this level at around $155,000 BTC. And at $155,000 BTC, if 155,000 BTC fetches almost 16 ETH, as our analysis suggests over here at around 17 ETH. So we'll divide this number, and we find that if we divide 155k over here by 17, we'll find ETH to be at somewhere at around $9,000, and a $9,000 ETH with our machine learning based price forecast for ETH itself. You see that over here the 1 standard deviation is pointing at around 4,400 ETH, and in the 2 standard deviation forecast also looks at around 7,000. So if the current valuation of ETH BTC holds, ETH going to 9k would be highly unlikely. But again, if ETH not only manages to succeed on its USD pair but outperform Bitcoin on its BTC pair, then a $9,000 ETH would look like somewhere over here, the models that we have for the DCA based model, where we see that ETH at between 0.9 and 1 risk could be somewhere between $8,800 and $9,600. Again, all of the content is available on cryptoweeklies.com. The link is on the bottom of your screen. You don't have to sign up or pay for anything. Right now, the the ETH USD risk is coming in at around 0.18. That means about 18% risk. Some of the best time to DCA you can check over here, and 18% risk and 82% reward for this analysis. Now, if we look at Ether from let's say now that we have looked at it from Bitcoin pairs, if we let this pair run its course and analyze its machine learning based predictions, let's assume that in the bull market, like in the last bull market, again essentially since 2021 began, back then 1 BTC used to fetch almost 38 ethers. So one might say that although right now Ether is not doing that great against BTC, compared that to beginning of 2021, 1 BTC used to fetch almost 38 ethers. Now it fetches almost 27 ETH. So almost 11 fewer ETH than the last time around. And now that we are approaching the post-halving year of 2025, again quite similar. Back over here we can see a drop from 38 ETH per BTC to about 13. That means almost 60% drop. If we were to say instead of 60% this time around, there is a 40% drop, that would give us somewhere between 14.5 ETH ETH per BTC. So in that scenario, again, if BTC goes to 155k over here, and we do, instead of a 17, we divide it by 14.5, we'll find that ETH on its USD pair could be at around $10,700. So that's one way to analyze based on this pair. On the other hand, in terms of where ETH stands on its own, you can see that over here. Let's go back to the home page of the site. On its SMA based risk pair, let's get rid of BTC for now. We find ETH somewhere lagging BTC, where BTC is at this moderate level. ETH is quite at low risk at this point in time, and you would find that ETH's tops usually come after Bitcoin stuff. So by that I mean in the last bull market as well, in February of 2021, BTC risk was quite high, and then ETH and its risk and its peak came much later at around May of 2021. Also, back in the secondary peak for BTC during October-November time period, at a risk level based analysis, Bitcoin peaked at around late October of 2021, whereas ETH was done at around early November of 2021. And you would also find that during this mid-cycle rallies, Bitcoin risk is much higher than ETH risk, and Bitcoin, that means Bitcoin rallies more, but it does not put a similar high on its SMA based risk model. Even this time around in 2024, during March of 2024, BTC risk was higher than ETH risk. So that means in 2025, if Bitcoin and ETH both were to rally, and if ETH were to catch up to BTC, now is a decent time to consider ETH. Again, not financial advice, because ETH is lagging by a lot compared to BTC at this point in time. If we were to extrapolate some of the estimated bull run targets for ETH per this model, again, this is very conservative analysis. The regression based risk that we saw at around 19%, the time weighted average price based model says 52% risk, the SMA model says 33% risk. If we weight these three risks together, we get a bull run peak at around 7,500. That is a conservative estimate considering our other analytics, which looks at, in terms of reward from this point in time, is at almost 3x from the current price action within the course of almost one year or so. Again, there are no guarantees. But again, with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel. I'll also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye-bye.